Today I'm flying my drone out on the coral pink sand dunes, where the sand flows like stock prices, sometimes up and sometimes down, and occasionally it gets blown sideways when someone tweets about interest rates. Today we're talking about the best day trading setups and how you can use the 20 EMA, the 50 EMA, and the infamous 200 EMA to navigate the stock market without getting buried like a bad trade, or in this case, in a literal sand dune. So if you're trying to figure out how to surf the market instead of wiping out, stick around. We're breaking down 4 key day trading setups, and you'll learn how to use the EMAs to keep you on track like a GPS for traders, minus those annoying
recalculating
when you make a wrong turn. Today we're going to dive into breakout setups with a real-life example from our trading day on September 30th, 2024, focusing on CAPR. CAPR. Think of it like spotting an oasis in the desert. You know it's time to take action. From about 9:42 a.m. to about 12:05 p.m., CAPR had been testing the waters, proving strong resistance at that $14.15 level. It was like a cactus, stubbornly refusing to bloom. But at 12:28 p.m., we saw our opportunity. The price broke through that resistance level with a strong momentum candle and impressive volume. That's when we knew the price was ready to trend toward our next target. When a stock breaks through resistance with power, it's like watching a midday sandstorm swirl up in the dunes. Unexpected, but invigorating. You've got to be ready to jump in. So when CAPR broke that $14.15 barrier, that was our signal to enter. And it's all about timing and seizing the moment, like getting that perfect shot of a playful lizard before it scurries away. Once we had that confirmation, we were off to the races, aiming for our next target. The pullback setup, a perfect opportunity to catch your breath before the next move. Let me show you a real-life trade that we took on September 30th, 2024 with CAPR. It's like that moment when the wind calms for a second before picking up again. After that explosive breakout at 12:28 p.m., the price of CAPR surged past $14.15 with a momentum candle that practically said, "Let's do this." But if you miss that initial breakout, don't worry. Markets are generous sometimes, and they give you second chances. At 12:49 p.m., CAPR pulled back to that 20 EMA, like taking a breather after charging up a steep dune. Price held that level for a full 8 or 9 minutes, and this was our second chance to get in. That pullback to $14.45 was just what we were waiting for. Another entry point. At this time, our algo confirmed it with a nice green arrow. Getting in on that pullback is like refilling your water bottle halfway through your hike. You're not at the summit yet, but you've got enough juice to get there. We aimed for our $15.55 target. That was our next target, and with price holding above the 20 EMA, we stayed confident. It was like watching the wind pick up again. Smooth, steady, and ready for the next leg up. Then at 1:12 p.m., CAPR gave us another pullback to the 20 EMA, this time at $14.73. Another green buy arrow appeared, confirming our entry. And not just any entry, a breakout candle punched through our cautionary target at $14.73 like it was a mirage in the desert. As long as price held above $14.73, we were golden. That was our line in the sand, literally. As long as the wind stayed in our favor, we were holding on all the way to our target of $15.55. And guess what? We made it. That's the beauty of the pullback setups. When price pulls back to the 20 EMA, it's like the market saying, hey, you missed the first part, but you can still join the ride. If you've got the 50 EMA and the 200 EMA below you, backing you up, it's like having the perfect hiking gear for the journey. You know you're in for the long haul. Reversals are like when you're enjoying a nice breeze, and suddenly, bam, it turns around and throws sand in your face. That's the market saying, I'm going the other way now. Try to keep up. And believe me, trying to fight a reversal without the 50 and the 200 EMA is like trying to build a sandcastle in a hurricane. If stock price crosses below the 20 EMA and then the 50 EMA, it's not great. And if it crashes below the 200 EMA, it's like the wind changed direction and it's now pushing you downhill fast. You're no longer surfing the dunes, my friend. You're face planting in the sand. On the flip side, if the stock has been heading down for a while and suddenly pops back up above the 200 EMA, That's a signal that the wind might be shifting in your favor. It's the market equivalent of getting sand out of your eye. Suddenly, everything looks a little clearer and you can start making moves again. Just make sure you don't celebrate too soon. No one likes a fake-out party crasher. Trust me, I learned that at a karaoke bar. All right, let's talk about the opening range breakout, which is like watching dunes dance with the wind on a lively afternoon. On September 30th, 2024, at the opening bell, UXIN took a strong bounce off the 200 EMA support level. This was our first clue the market was ready to play. Looking to the left, we noticed the 50 EMA had flattened out, setting the stage for a potential move. We patiently waited for the opening range to prove that flat EMA level around $5.95, and lo and behold, at 7:33 a.m., just 3 minutes after opening bell, we got our confirmation. So we bought at $6.09. Setting our sights on a target of $6.75. It's like spotting the perfect sand dune ride down. We held on tight until the first sign of weakness at 7:38 a.m. And that's where we sold at $7.02. That's almost $1 profit per share in just 5 minutes. And that's what I call riding the wave of opportunity. Remember, friends, just like the shifting sands, the market can change quickly, so always keep an eye out for those signs of weakness. Riding the right wave can lead to some fantastic profits. Just don't forget to pack your sunscreen. So just like these dunes that shift with the wind, the market moves with trends. The 20, the 50, and the 200 EMAs are like your compass in the desert, helping you navigate the highs and the lows without getting lost in the sandstorm. To sum it up, use the 20 and the 50 EMAs to confirm momentum in breakouts and pullbacks, and rely on the 200 EMA for long-term trend confirmation, because sometimes you need a little more than hope to avoid getting buried. And remember, trading is a lot like walking these dunes. Keep your balance, watch your step, and always pack snacks.